Hello, and welcome to another episode of What's Working in E-commerce. I'm Egan from Caravan Digital. We're an e-commerce digital marketing agency. And today I'm so excited to have on Daryl. Daryl, welcome. You are from Big Flare and you're a PPC expert. Tell us a little bit about yourself.
Hello, Egan. Thank you so much for having me. And yeah, really happy to be here. So a little bit about me. I have been in the PPC game for over a decade now, probably closer to 15 years now, because I started Big Flare, which is a PPC agency specializing especially in Google ads for e-commerce companies. And I started Big Flare around 9 or 10 years ago. And at the time, I was following the remote working dream, and I left my hometown of London about 9 years ago to flee to Asia and set up the company as a fully remote company. And now we're a team of 9, 100% remote, scattered across the globe. So we cover European, American, Asian, and Australian time zones. So we've got all the time zones between our little team of 9. And what we really specialize in is kind of any paid traffic channel that delivers results for e-commerce companies that want to grow, but especially Google ads, because the way I see it, Google ads, search advertising, shopping advertising, and retargeting on Google, it's kind of like the 80-20 of paid traffic for e-commerce. It's the thing that usually works the quickest and the easiest. And if you're just starting out in paid traffic, it's something that allows you to get some low risk additional profit into your company, which you can then invest into higher risk, higher rewards traffic channels such as Facebook ads or YouTube ads or Instagram or all these more sort of awareness focused channels.
That's very interesting. I've got some ideas myself about that, but I'm curious, why do you think Google ads is lower risk than Facebook and Instagram?
I'd have to put the caveat there that it's lower risk for a lot of businesses, possibly the majority of e-commerce businesses. And the reason is because of the strong intent of users that you're attracting on Google Ads. I like to think a lot about the IDA marketing funnel. So at the top of the funnel, you've got awareness, then interest, and then desire, and then action. And Google is search, shopping, and retargeting on Google is very much at the bottom of the funnel. You're targeting people who already have desire and are ready to take action. And let's say you're selling teacups, right? You're on Google. You're advertising to people who are searching for buy teacup. I mean, that's a pretty strong intent signal that someone wants to buy a teacup. The big pro of Google is that it's bottom of the funnel traffic, high conversion rates, high intent. But of course, there's always a pro and a con, right? The con is that, like, if you imagine the traditional IDA marketing funnel, the D and the A, the closest to the conversion and the highest intent, but also remember that they're the smallest parts of the funnel. Whereas the A part at the top is the widest part of the funnel. So big pro of Google Ads is the high intent, high conversion rates, bottom of the funnel traffic, lowest risk, but also it's the least scalable. So that's why if you've got to pick and choose between your channels and you're just starting out, I would normally recommend Google first, bottom of funnel. And then when you're ready to scale, that's when you go higher up the funnel and try and approach those trickier channels that take a bit more effort to get to work.
Yeah, that's well put. I think that's kind of what I've seen as well, of maybe you can tap into that awareness if you're doing paid social, but you're tapping into existing demand. You're lower in the funnel when you're doing search. I like that.
And I did mention a caveat there and say this rule doesn't hold fast for every business, but for a lot of businesses. Like there are a lot of e-commerce businesses these days actually that are sort of busting out some sort of new trend, or they're selling like a newfangled thing. And if what you're selling is so new that people haven't heard of it yet, then often like you're not going to get any volume at all out of Google because people haven't heard of this thing yet, so they're not searching for it. So for some advertisers, if you've got a very novel product or something that doesn't have a lot of existing search volume, it could actually be better to go to something like Facebook ads first, because there you're building awareness. You're pushing people into the top of the funnel and making them aware of this thing they've never heard of before, but that they might actually want once you put their ad in front of their eyeballs. And then if you master that awareness channel, if you master an awareness channel like Facebook, that often drip feeds down into the lower parts of the funnel and boosts your your PPC and SEO traffic, if you're lucky.
Then you're kind of hitting all stages of the funnel. I like that. We've seen that too. I think that's a great way to think about it. Well, one thing I wanted to ask Daryl is, how do you vet clients, or say prospects are coming to you and they want to work with you on, PPC ads? How do you look at them and say, hey, are you guys ready for us? Are you ready for paid traffic?
Definitely much prefer to work with companies that have a good experience of paid traffic, of spending on advertising, and ideally already within the 7-figure plus range of business. And the clients that work best with us are the clients who already have something working, but now they just need an expert to come in and sort of like try and 10x that, right? It's like, we're not going from 0 to 1, we're trying to go from like 1 to 10. So like where we specialize is that latter part, like the 1 to 10. 0 to 1, it's just always tougher to go from 0 to 1. And that's going to be true of working with any paid traffic provider, any kind of service provider where you're trying to go from 0 to 1. There's just like a lot more to figure out, and the success rate is a bit lower and the level of work is a bit more intense, right? Whereas what I find is that when we work with someone who's already got to 1, our expertise and knowledge can scale their results much, much faster and much, much more reliably.
Yeah, thank you for saying it that way. That's what we've seen as well. And we were just having a conversation with someone about that today. What is that 1? Is it a revenue mark? Is it conversion rates? Is it, number of orders per month? Like, how do you think about that?
In terms of paid traffic, I think the 1 is when you initially achieve your a profitable return on ad spend target, right? So you start any new paid traffic campaign for your e-commerce store, and 95% of the time it's going to start out unprofitable, unless you're very, very lucky, like really lucky. Like 5% of the time, maybe it just starts right out of the gate and then, oh, it's profitable. Okay, let's scale it, right? But most of the time, it's not going to start out profitable. You're going to be losing money initially. And when you get into paid traffic, you want to have some amount of money that you're willing to invest that, you're not going to lose sleep over if you lose it. It's like this is an investment, it's going to take time to get it to work. And you do your campaign optimization, you build up on what's working, you cut what's not working. And for us, it normally happens for a new campaign that we get to work from 0 to 1. Normally within the 2 to 3 month mark, it happens. But somewhere along that journey of optimizing, your ROAS starts too low and you're not making money yet, but it gets higher and higher and higher week on week. And then eventually you hit that point where, now we're profitable. We've gone beyond the break-even ROAS. Every dollar we're spending is generating positive profit. And then we flip from, when we're going from 0 to 1, we have to stick to a very strict budget, right? Because it's not making money yet and you're losing money, so we're not going to lose more money than you budgeted. We're going to stick to that budget until we hit to that 1, which is, okay, now we're ROAS positive. Now it's generating profit. And then the budget decision kind of flips. It's no longer, my budget is 10K per month, never go above that. When you hit the point of ROAS profitability, the budget normally becomes, okay, keep that ROAS the same or better, and now please just spend as much as you want. Spend as much as you can. So the budget flips from never spend more than this to spend as much as you can as long as we keep this ROAS or CPA. And that's the point where I think you've gone from 0 to 1, like specifically with paid traffic, specifically with Google Ads. Like this isn't like, I'm not talking about the wider e-commerce like business that you're running. I'm just looking narrowly at 0 to 1 in paid ads.
Yeah, that's well put. I appreciate you saying that. That's certainly what we've run into with clients as well. So we're always working with how do we talk with prospects about this, that there's going to be a testing phase up front. Once you get some traction, then the trick is scaling. So it's helpful to hear that you guys are looking at it and thinking of it that way as well. I appreciate that. Yeah. Well, Daryl, I saw a really impressive case study you did on Google Shopping. You've kind of got some innovative things you're doing there. Can you show a little bit of what you're doing and how you guys are thinking about Google Shopping right now?
Yeah, absolutely. I would love to do that, and I have a few screens to share with you. But before I do that, I'll just let you know the kind of results that we've been seeing with this technique that we've recently started testing. So we tested it on a few clients. One of our e-commerce clients is in the organic skincare niche. And within a couple of months of launching that test, we're already seeing a 205% increase in revenue in their shopping ads account. I actually had to revise those numbers because when you first saw that case study, it was 175%, and before this interview, I decided to go and check the numbers again. It's actually gone up to 205% now. So yeah, it's doing pretty well, and we've been really happy with the results. And the other nice thing about this is I think that what I have for you is a fairly simple methodology that anyone who's running smart shopping or who's running standard shopping with smart automated bidding, anyone who's in that situation can replicate this. So I'd like to show you what we did and hopefully help a few people along the way. So what we did is we previously had a smart shopping campaign where and this is, I think, like a lot of people who are running smart shopping campaigns are going to be in a similar boat, where basically all the products are in the same campaign. We've got maybe 50 or so products, and they're all in the same campaign, and they're driving towards the same ROAS target. And when you have smart bidding enabled on your shopping ads campaign, you're going to get to implement one ROAS target for the whole campaign. And that ROAS target will be what Google is aiming for as a campaign average. And what you will see, generally speaking, if you've got a bunch of products, is you're going to see a distribution, a range of actual ROASs happening in that campaign. So let's say you aim your ROAS at a target ROAS of 300%. Well, what you're going to see is some products are going to perform a lot better than others. Like some products will perform much higher than 300%. They'll be doing 500, 600, 700%. And then some products are going to be much lower. They'll be 200% and 100% or even sub 100%. And the reason, and Google doesn't care if that happens, you can have on the bottom end, you could have some products that are way below your break-even point and they're actually losing money. And Google won't care because the way the system works is it's configured to deliver your average. So if stuff is way below average and actually losing money, it doesn't care because you've probably got some other stuff that's way above average, bringing up the average, and between those two things, you end up with your average target ROAS. So what we did was we spotted this happening and we took all those products and we broke them out into 4 separate campaigns, and we used a tiering system based on their previous ROAS performance. So these are the 4 campaigns we created: high ROAS, mid ROAS, low ROAS, and loss ROAS. And these are the previous performance levels of the products that were in those tiers. So we had high ROAS products were performing above 300%, mid ROAS at 2 to 300, low ROAS at 100 to 200%, and loss ROAS was sub 100%. And we broke these out into 4 different campaigns, which allow us to use 4 different bid strategy target settings. And we set them to new targets. So high ROAS stuff, we set to a ROAS target of 275%. The thinking there is kind of wanted to set the ROAS target a bit lower still than its previous target. And what that does is that will make the machine increase the CPC bid, which increases your impression share. It increases your share of the market. So you get a slightly lower ROAS, but you get a lot more volume at the same time, which often works out to more profitability. And then mid ROAS stuff got a target of 200%. Low ROAS stuff got a target of 153%. It's a very precise looking number. The reason for that is because that's actually this particular client's break-even ROAS. And then loss ROAS products, we set to maximize conversion value. So we didn't give it a ROAS target. We just told Google, okay, look, we're going to set you a daily budget, and we just want you to get as much revenue as possible for that daily budget. And yeah, just doing this immediately a week later, we saw incredible results. And like a couple of months later now, we're seeing like 205% increase in revenue.
That's phenomenal. You said something really interesting in there. A number of things. Like one is just you're breaking out not just the winners, but sort of what tier are they performing at, and let's put them in their own campaign and set their own ROAS target. But the thing that really caught my ear there was in the old days when it was all manual of what's your spend per day, what's your cost per click bid. The way you would go after more impression share, it might be raise your bid, but moreover, it was spend more per day, right? That's at least how I thought about it. But what you said in there is when you're on automated bidding, it's a little, to me, that's a little bit counterintuitive. You say lower the automated ROAS target. It sounds like that could be smart shopping, that could be standard shopping, but we've got automation on, right? And that automated bidding, as you lower that ROAS target, you're increasing your CPC bid and thereby you're increasing your impression share. That's really interesting.
Correct. Yeah. So that's actually something I think about a lot. And I mean, the old way of increasing your impression share, I mean, it's exactly the same. Like one way to increase your impression share is going to be to bid higher, because then you're going to show up more often and higher up the page and get a better impression share, right? The thing that's different is how you increase the CPC. Right? In the good old days of manual CPC, it's really easy. You just go in, and that CPC that was $1, you just change it to $1.50, right? You literally just manually increase the CPC bid. But these days, most of the time, we're using automated bidding, and that means the machine is controlling that CPC bid for us. So instead of manually just making the CPC bid higher, you have to know how to tell the machine that you want it to bid higher. And the way you do that is you lower your ROAS target. When you lower your ROAS target, the machine now knows that it has room to bid higher, right? Like if it's delivering a ROAS of 400, but you and your ROAS target is 400, then the machine thinks, okay, great, my CPC bids are exactly on target. But if you now drop your ROAS target to 300, the machine's going to see, oh, okay, now my ROAS is too high. You've told me to deliver 300 and I'm actually delivering 400. Okay, I need to close that gap. And it's going to close that gap by increasing the CPC bids. So the level of the CPC bids are sort of in a inverse relationship to the ROAS target. The higher your ROAS target goes, the lower the machine is going to put your CPC bids, and the other way around. Like the lower your ROAS target goes, the higher the machine is going to bid on your CPCs.
Yeah, thank you. That's just such a gem right there. That's so valuable. And then this combination of tiering it, breaking it out. So you've got products. I'm curious, how many products will you have in each of these tiers?
So how many products? I mean, it really depends on what you see when you pop open your shopping campaign and see the distribution of products. So we just created the tiers and let the products fall into whichever tier they fell into, and didn't worry about trying to force each tier to have a certain amount of products. And what we found was that pretty much what you'd expect, most of the products fall into the middle tier, and then the higher and the lower tier have less products because they're like a bit further out from the median. And yeah, we didn't it's going to be different for everyone because everyone's got a different amount of products and everyone's going to have a different distribution of products, right? You just got to look at your current shopping performance, see the distribution, make a decision on what tiers to use based on what makes sense for you.
Daryl, you've been so generous with this. Do you still have time to show us the inside of an account a little bit?
I do indeed, yeah.